Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is through the trading week ending September 19th, 2014. Well, it's a very interesting week. We had triple witching, we had monthly option series expiring, quarterlies, futures expiring. All total, the market tends to have a upward bias. Markets grind higher. Although Friday we got some action here, some tape action that would indicate to me that the market is setting up for a potential larger down move. Now, what I've got on my chart here is the S&P 500 Emini Futures. You can see I've shown this chart many times before. I really haven't had to change it for quite some time. You can see going into January of 2013, we've been pretty much in this tight band, this upsloping channel for quite some time. And the 50 EMA, which is the red line, has been inside the band. Now it started to slip outside the band in early August after this nice little pullback we had here. It came right down and touched a prior pivot high. It quickly regained back up. We came down right on the 50 EMA. I mean, you guys can see that. And now we're sitting right in this area here. So let me just blow this up a little bit and just give you a little bit more perspective on the chart here. As you can see, and I mentioned this before, this gave the bulls a lot of confidence when we bounced off the 50 EMA, just slightly south of the upsloping channel, and we moved hard up. Well, we got a cross on our 412 cross, and we got a cross down here, so we're bullish. Although this candle pattern here was a bearish candle pattern. We closed in the red. We took out our prior all-time highs of 2011. We made new highs on Friday of 2014.50, and then we promptly sold off and closed in the red. That is a bearish pattern, folks, or at least that shows bearish tendencies here. You can see I've got a Fibonacci extension over here on the right. You can barely see it, but we're sandwiched between 2008 and 2022. Now, I will remind you that Fib extension, this is a daily chart. I also have the exact same Fib extension off a monthly chart as well. So we've got two different time frames that are showing a very tight resistance at 2022. In fact, what I told our members last week, I said I would not be surprised as we were moving up and we moved up and took out that prior pivot high there, that we would challenge the all-time highs of 2011 right there, probably take them out, but we're going to run out of steam very quickly. The thing that's starting to set up that gives me a little bit more pause for concern is in looking at the MACD, we're looking like we're setting up for a potential bearish divergence move here. Clearly, we're at a higher high here from there. Now, we didn't close there, but we're within this band here where I expect a lot of resistance at 2022. Should we make it up there? We may not even make it up there. The way Friday's candle handled, it was more of a down bearish type of candle trading action than bullish, even though we moved all the way up and took out our all-time highs from that point right there. But should we roll back down, you're going to get one of these kind of rolls like this, and you're going to have the MACD roll, and then that gives us the bearish divergence, which means more than likely we'll come back down, go below 2,000, test these key areas here. The 50 EMA is moving up the channel. It'll probably be in this area right here, but I suspect we'll take out that level. We'll certainly take out the 2,000 level on the way down. And then, the thing that we want to watch for, we got a couple of key pivots as we work our way down. But the big pivot that I want to point out to Barry, we got a near-term pivot, which most eyes are going to be on. It's going to be this low right here. That low's at 1968. This low right here, sitting at 1968, which was where the 50 EMA was. That's going to be a key pivot for us going forward over the next number of days. If we come down and that holds and moves up, that'll give the bulls confidence, right? But if it comes down, we get a little bit of a bounce, and then we roll back and take that out, then watch out. We're gonna be heading down much lower. The next more significant pivot would be 1919 right here. And then, of course, we got the big one right down in that area there, which is right around 1890, roughly, in that area there. So, folks, we can give it up very quickly as we work off some of this big move that we made after that big down move right there. Okay, I would not be surprised if we saw it. And I am about 40% in the market, mostly long, although I am playing them with bull put spreads, most of the long positions. And as I had mentioned to our members, and I'll just point it out here, about 4 weeks ago, I was telling members that technology is starting to become a leading sector, and so is finance. And then we picked some stocks. Um, we picked some stocks both in tech and in the finance sector, banks, that look pretty good, and they've done very well in the past 3 or 4 weeks. So this is kind of how I'm seeing this thing line up here. If we look at the Russell, because this gives me pause for concern. And remember, I tell you guys all the time that the Russell is small and mid cap, and the money has just not been in small and mid cap this year. Money that is going into the markets is going into large cap dividend paying stocks. But if you look at this right here, look at what the Russell did. This is a very ugly candle. If we look at Friday's performance, the E-mini S&P 500 futures closed down 4 points, a little over 4.25. But the Russell futures closed down 18 points. Look at this candle, folks. This is a bearish candle right there. It is a bearish engulfing pattern. We took out the high and low of that candle. We took out the high and low of that candle. So on Wednesday Wednesday and Thursday, we took out the lows and we came all the way down, and we're now sitting right on the 200 EMA, or just slightly above it. It tested it, but we closed at the low of the day. We opened at the high of the day, just above the 50 EMA. You can see this red line. We didn't get much, and then we sold all off, and we closed at the low of the day. All right, that's not good. That tells me that money and risk is coming off the table as we round out the month of September and we go into October. Keep in mind the rut and this regression channel is still intact. Okay, all we did was move from the top of the channel down to the bottom of the channel. That's all we've done. And you can see the pattern of these channels as I put on here this year for the rut. The rut tends to move in a very steep arc, both up and down. You can see how this thing is here. In the early part of the year, we had a very steep run up, and then by the same token, a very steep run down. And we came down and we touched nicely from where we started, and we formed a pivot high with these two pivot lows right here. They're the same. Then we came all the way back up, almost the same, and just about touched that pivot high right there by just a couple of points. We came down. We didn't quite make it all the way back down, nor did we quite make it all the way back up. So we've got this channel here that was, again, moving in almost with the same. Each one of these channels is a very high rate of ascent. And then coming back down again. You can see the degree of ascent that the price action's moving in. So the favored direction of the Russell is that way on Monday. And again, if the Russell cannot hold up its end, money's going to eventually come out of all the other markets. The Russell tends to lead up and tend to lead down. Price action for the other indices, all else being equal. You can see the E-minis here, completely different looking chart at near all-time highs. But it's getting weak, folks. When you've got E-minis at all-time highs and you got the Russell 2000 selling off and pulling back very strong, you got money coming out of the market. And eventually these small few stocks that are holding the market up are going to give way, and then the market's going to roll. So that's the way I'm looking at this right now. If we look at the NASDAQ, which has been the strongest, you can see right here with NASDAQ, same thing with the E-mini S&P 500 futures. You can see here we made a high, a little bit of a higher high. You can see that pullback and a potential MACD like that. If that happens, we're going to come down and test 39.91 very quickly. You can see now the 50 EMA is up there, so that's probably where we're going to head. And we've got a huge separation between the current price and the 200 EMA right there. You can see it was much better and more healthy down in that area. Up here, that's not healthy, that wide separation. That just tells me we're looking for a pullback. Now, I can't assure you that a pullback's going to happen this week, next week. It may start on Monday. But like I said, I've got a smaller allocation now in the market on the long side. I took up some hedges in the S&P. I took some shorts in the S&P futures on Friday. So that's kind of how I'm seeing this. Now, the other thing, take a look at bonds. Bonds is also showing you a little bit of fear is coming back into the market. You can see this line right here starts almost right at January, right at the beginning of January, this little shaded blue zone. And you can see we moved up the entire year, and this zone has been pretty much where bonds pull back to and test and then bounce off of. We broke the zone right in this area here, and we just broke it with everybody expecting the FOMC to come out and be very hawkish. Well, they didn't become hawkish, but they did change some of the language to say that when they do increase interest rates, they're going to rise at a faster step than before. You can see bonds set on the 200 EMA, and it very rarely did it close below, and if it did, just slightly below. And then on Friday, bonds just bound up very high. Okay, I mean, it just reversed course completely. So bonds, now longer term, I'm bearish bonds. Okay, so don't get me wrong. I think what bonds is attempting to do right now is a little bit of a reflex rally where we move up like that and then it rolls back down, tests this area, and then it's going to end up somewhere down in this area here. I've been short bonds in this area right here. In fact, I'm still short bonds even after Friday in the futures market. But if we come back up, get much higher, I may look at putting some more shorts on. I don't believe bonds is going to get back up into this area. If it does, then that means we're going to be in for a lot of trouble in the equity market. I think most people are not going long bonds. They're either shorting bonds or cutting down their allocation in the bond market, which has caused this down move like this. But you know, we're in a tricky time here. Here in the United States, in the U.S. markets, we got big president our midterm elections where we elect the Senate and Congress. So there's going to be a big push there in that. So the elections are going to cause some volatility in the markets. And then we've got a number of things hanging over in the markets as far as interest rates. Now that the Feds have stated their policy and what they want to do, I think things are going to normalize a little bit in some of the markets, but we're still going to get movement in the currency market and the bond market. And speaking of currencies, you can see right here, look at the U.S. dollar. This is dollar futures. I am long the dollar future in the futures market. You can see here the dollar has just been on fire. I mean, it is just really belted up very strong. It pauses a little bit at some of these resistance points, and then it keeps moving up. And just to show you, here are these resistance points. This is a day chart. Let's put it on a weekly, make it a little bit easier for you guys to see. And we'll just stretch it out a little bit right here so you guys can see. Now you can see the dollar, and you can see where we're sitting right up in this area here. So we got a lot of blue sky between that point right there and this point right there at 89. We're sitting at 84.96 right now. But we've had such a fast ascent, I would not be surprised to have a little bit of a pause for the cause. Look at each of these candles. Starting back here on August the 18th, each weekly candle has just been near open at the bottom and close at the top kind of scenario. And we haven't really paused much. If I go back to the daily, you can see how we do pause at some of these areas. But I mean, this is solid. There is no bearish divergence at all. So the U.S. dollar is where we want to be long. Now, a strong dollar weakens the commodity market. It weakens the gold market. There is no inflation. And we'll look at the metals in just 1 second. But this is the dollar. Now, obviously, with a strong dollar, the euro is just going to hell. Look at the market in the euro here. Here is the support point with the euro. You can see right in this area here, this will be, what is this, our fourth trip to this zone, and each time we come down, we stay in it for quite some time. I mean, you know, each of these times, like right in this area here, right there, and right there, it's for about a week. This is a daily chart, but it's about a week that we spend our time there until it resolves itself and moves higher. We're just now coming into this area here again. So now the question is it going to do the same thing and move up? What's the favorite action? I do believe because we've had 3 bounces here, the charts would indicate that we're going to bounce up. I think this time may be a little bit different. I do believe we're going to bounce up with the euro. We may we may move up and stay in this box range right here for a little bit of time, and then if we break here, we're going bullish. If we break here, we're going bearish. So I think we're going to be in this little tight range here for a little bit. So I wouldn't trade it inside this range. But if I get a break one way or the other, that's pretty much the way I'm going to trade it. This was pretty much the same way that we looked at the yen. If you look at the British pound, well, we played the pound to the long side leading up to the Scottish vote. We did well. I moved my stops up, but it rolled back over after a no vote. I was expecting it to run a little bit harder to the upside. It didn't. I made profit on it, but not as much as I would have liked. You can see this big candle right here on this daily chart where the pound just moved all the way up and then it gave it all up. Now the pound really started moving up about a week and a half before the vote, and then it came up here, and then right at the vote, as soon as it was tallied and everybody knew, there's a sell-off. So I could see us coming back down to this area down here, consolidating before we make another run higher. Longer term, folks, not short term, but longer term, I am bullish the pound. Here's the 200 EMA. The trajectory is already down. Yesterday we got a cross in the 50 and 200 to the downside. I do believe if there's any country that's going to raise their rates before others, it's going to be Britain. Right now, it's not a bullish trade. In fact, it's still showing bearish, but the minute this one shows bullish, we want to take a look at this and play with it pretty good. All right. If we look at the yen, well, the yen has just come unglued just like the euro. Look at that. Oh, my gosh, this was just a wild move. You guys probably knew, or at least our members did, that was the box we were in. I said the odds favor a break to the downside. If it does, we're going to challenge that area. But whichever way it breaks, that's the way we want to trade it. We broke to the downside a couple of times. Didn't get very far. That was a little short, quick trade there. But when it finally, because you don't know when the final break's going to be, but it broke. We came down there and tested this area for a week, and now we're just running down. How low can it go? Well, if I blow it out a little bit, you can see right here we've got several support points, lower support points that we can hit. Right, here's one right here at 90.13. So we're almost there right now. So I suspect we could come down and hit that area, find some support, and maybe do another one of these kind of channeling patterns here. Remember, the lower the yen goes, the higher the Nikkei goes, generally. We had that long area of support. It was building up. And then normally when you get that, the market moves higher. But in this case, I was expecting the market to move lower because Japan is putting more stimulus out there. Just like China. China announced more stimulus late last week as well, which also added to some of the bullishness of the markets as we were going into option expiration into the week here. So this is Japan. And then we haven't looked at it recently, but if we look at the Australian dollar, same thing with the dollar. The dollar's giving it up. Look at that. I mean, that is just a huge fail right in this area here. To some extent, the dollar trades a lot off commodity prices and what China's doing. Because trading partner of Australia, a big one is their biggest is China. You can see that break. We came down here. It didn't take long to come down and test that area. So I think we're going to sit here for a while. If it breaks, guess what, folks? We're going to come down and test that area there. So I would be more bearish than bullish on the Australian currency as well. If we look at gold, well, guess what? Gold broke key level 2. Everybody's breaking, going to the downside. Look at this. Here's gold. I said if we break this area here, well, we're going to be off to the races. And sure enough, we are. We've come down and we've tested this area several times. I think gold is going to find its way down in this area here. Okay. If this breaks, we're going to come down and test the psychological barrier of 100, and I think we'll go lower, which is what I think is going to happen with gold right now. Silver, my goodness, the silver futures is down to 17.79, so it's sub 18 right now. Silver's the same way. We broke this very, very strong key level right here. You can see this zone here. We went below it intraday, but we always managed to close up inside the zone. Right there we broke, and we haven't looked back. We closed down at the bottom of the pattern here. So to me, 17.015 seems like the most logical way for us to go here with silver. So silver and gold are getting decimated right now. At some point, the timing is not right now. At some point, these are going to be great long trades. Oil, same thing with oil. Oil is taking it in the shorts right now. Look at this. You can see oil is sitting in this zone. Again, it just cannot get the escape velocity to penetrate on the upside. And we're just sitting right in that area, right there, several times. I mean, we spent, close to a week or 2 weeks over here trying to resolve this and get escape velocity. When we finally did, we came right back down. We spent over a week there, and now we came back down, and we've just been hovering right in this area here with every time we try and get an escape velocity, it pushes us back, or sellers push us back down. The 200 EMA is definitely overhead resistance there. The 50 EMA, there's the 200 EMA right there. You can see the cross in the two. So the odds are now starting to tilt back in the favor of the bears. We've been in this tight range for quite some time, from this 90 to 108 area. So let's watch this very close, and we'll see how oil resolves itself. Natural gas is the same way. It turned down on us on Friday. Inventory levels are very high. You would normally assume with all the trouble in the Mideast, you would have more issues with oil and nat gas. It'd be higher, but it's not. We got a down signal on nat gas as well. Now, I had a bull put spread in nat gas, but you can see nat gas is being turned away every time it hits the 50 EMA right there. Every time, it just cannot penetrate it. We're sitting right here. So now the issue is, if nat gas comes down to here and breaks, we're going for a run, folks. We're going to do one of those kind of numbers like that. That's what we're going to do, more than likely. So let's watch this very closely here to see which way nat gas goes. Okay. And then we got several others that we're looking at with our group. I'm not going to go in detail for the weekly weekend summary. For our members, we got our session Monday or Sunday night. I look forward to seeing you guys there. But the primary reason why we're just getting, the commodities are just getting really decimated is because of this guy right here. This would be the U.S. dollar. When the U.S. dollar gets this strong, this quick, like this, then generally most world commodities are traded in U.S. dollars, so it tends to put more downward pressure on the U.S. dollar. Now, the only thing I can say near term is we've had such a huge run up. Again, I wouldn't be surprised to have a little bit of a consolidation here before the dollar probably resumes a higher path. Why is the dollar going up like this? Because it's anticipating higher interest rates and at a steeper plot, meaning they're going to go up at a steeper rate than was originally forecast. And that's bullish the dollar, right? That is bullish the dollar. So that's a little bit about where we're sitting this weekend, everybody. Just as a reminder, members, we got our session tomorrow night. Our Secret Trader session started at 8 p.m. New York City time. If you're not a member of our group, I highly encourage you to check us out. We're doing really well. Got a lot of things going on. Got a lot of things getting ready to come up. So check us out. We got a number of different membership plans. I think the one in this email, or the one that you got to come to this site, talks about our monthly membership plan, which is a relatively new one. You might want to check it out. I think you'll enjoy it. This fourth quarter is going to be very interesting for us. So I think there's going to be a lot of trading opportunities. I think we're going to see some consolidation because interest rates are still low before they go up. Kind of like buying a house before interest rates start going up. You're going to see a lot of companies looking to acquire. So I think you're going to see some more acquisitions, probably in the technology space. You're going to see it. And I think that's going to offer some opportunities for the right companies. All right, everybody, have a really great weekend. Members, I'll see you tomorrow night. Bye now.